Next presentation is on assessment of strategic management, enterprise management, and internal control systems of audits. And it's the our implementations of the assessment of these systems. I will share my screen and I will start. Let's start. What's on the agenda? Internal control and in financial audit standards, internal control in financial audit practices at the TCA, assessment approach and methodology. I would like to start with the audit standards. The first one is financial audit principles. I have included these standards because they are basis of our assessment and our audit practices before our assessment. Since we are all familiar with these standards, international standards, I will just scan it. I won't give details, but I would like to highlight some points related with the one question before the break. Let's start with the TCA 200 financial audit principles. In this principle, in this standard, internal control is one of the preconditions for a financial audit. And it ensures that the management of the entity acknowledges and understands its responsibility for internal control that management deems necessary for the preparation of financial statements that are free from material misstatement, whether due to fraud or error. So again, we understand from this statement that internal control is a function of the management and they are responsible for the preparation of the financial statements that are free from material misstatements. And I think the internal control main aim is that in terms of the audit, financial audit. And again, in these standards, it is IC is part of understanding the entity with the aim of identifying an assessment of the risks of material misstatement. It is very important. As auditors, we should know why we are trying to understand ICs of audits. What's our aims? Our aim is to obtain a sufficient understanding of the audited entity and the environment in which it operates, the applicable financial reporting framework, and the entity's system of internal control. An entity's system of internal control comprises 5 components. We have already known this. And in the standards, the auditor's identification and assessment of the risks of material misstatements takes into account control risk. What is control risk? Control risk is the risk that internal controls do not prevent or detect and correct particular errors or misstatements. So one auditor shall take these risks into account. And the auditor shall evaluate the design of the controls relevant to the audit and consider whether they are likely to be implemented in practice. So what does the relevant to the audit means? Actually, it is the decision of an audit team that if they think that some controls or some risks are relevant to the audit, they can take into account these risks to be able to design their audit. And let's look at the other standard, which is more related to internal control audit, identifying and assessing the risks of material misstatement through understanding the entity and its environment. And again, according to this standard, Understanding the internal control system of the entity assists the auditor in identifying types of potential misstatement and factors that affects the risks of material misstatement, and in designing the nature, timing, and extent of further audit procedures. This is clearer than the other standards that as we can understand from this standard, one auditor should understand the internal control system for identifying types of potential misstatement and for designing the audit procedures. So the audit team has two major aims: understanding or estimating the potential misstatements and material misstatements, of course, and designing the audit procedures. Please bear in mind, because we need these two objectives. So according to ISA 315, relevance to the audit is highlighted in this standard. The auditor shall obtain an understanding of internal control relevant to the audit. So it is a matter of the auditor's professional judgment whether a control individually or in combination with others is relevant to the audit. So we understand that the relevance is up to the professional judgment of the auditor. And in these standards, you can see many phrases and or many principles which highlights the internal control over financial reporting. Here is the main focus of us today in this presentation. Internal control system is bigger than the financial reporting. As you may remember, there are three categories of objectives one organization aims at achieving. So these objectives, let me remind you again: operating, reporting, and compliance. But financial audit standards specifically is focusing on the financial reporting parts, because the main aim of a financial audit to find out if the financial statement have some acceptable assurance. You know, the four financial statements are free from the material misstatements and errors. Yes. And after highlighting this one, I would like to mention a little bit assessment methodology according to COSO. COSO has a bundle of internal control framework. One of the publication is the illustration tools for the assessment of ICs. As Turkish Court of Accounts, we adapted these illustrative tools to our organization to be able to develop a methodology for the assessment, both internal control and enterprise risk management. So we need some requirements for effective ERM and internal control. For internal control, each of 5 components of IC and relevant principles should be present and functioning. And these 5 components should operate together in an integrated manner for an effective internal control. And what does present refer? Present refer, it is the determination that all components and relevant principles exist in the organization. And function refers that the determination these components and relevant principles are functioning. So the organization implements them. So having some principles, standards, rules, legislation is something, and implementing them is another thing. I think the function refers to this one. So what does the operating together means? So it means that all components operates together to ensure that the internal control is system is effective enough to prevent material misstatements and errors. And let's look at our applications at the TCA. By the way, it's very quiet. I hope you hear me. So am I in English channel?
I hear you well.
Okay, okay. Okay, so let's mention our TCA's law. According to Article 36, the audit by Turkish Court of Accounts shall cover regularity audit and performance audit, and the regularity audit shall be carried out through compliance audit, financial audit, and assessing financial management and internal control systems. As you can see, we are not just carrying out regularity audit. It means we are not just carrying out compliance audit and financial audit. We are also assessing financial management and internal control systems. And my team is responsible for developing the methodology to assess financial management and internal control systems. In terms of financial management, we can say that ERM is I think the biggest tool for right now. Strategic management and ERM is the biggest tool of the financial management. But we have other tools, of course. Today, I will show you our assessment approach. But please keep in mind that we are assessing the systems separate from the financial audit, but we are carrying out the evaluation at the same time with financial audit and compliance audit. I mean the regularity audit. But in the report of regularity audit, there is a specific section for the evaluation of internal control systems. So we don't issue any separate reports. But it's a specific part of the report. So actually, this is the thing that in our audit, in our training programs within our organization, we also highlight and stress this very much. Audit teams understand internal control systems of auditees as part of financial and compliance audit. The main aim of the audit team is to identify types of potential misstatement, factors, and develop audit procedures. I would like to underline the develop audit procedures because, you know, without understanding the internal control system, you cannot develop audit procedures effectively. And as part of the financial and compliance audit, our auditors are carrying out the understanding of the internal control system. And secondly, audit teams evaluate these systems as part of the assessment of financial management and internal control systems. Remember, it's the mandate of the law. Again, I will show you, sorry. Yeah, remember these three things. Regular audit shall be carried out through a compliance audit, financial audit, and assessing financial management and internal control systems. So audit teams evaluate these systems as a part of this assessment. So the audit team's main aim is to overall assessment of a system of internal control and ERM and detect ERM and internal control deficiencies. It means audit findings in the regularity report. So since our audit teams are carrying out the compliance audit at the same time with the assessment and financial audit, if as an auditor encounters a deficiency in terms of the incompliance with the legislation, the auditor should place audit finding in the report. So how did we adopt the cause assessment methodology? We have formed out 35 audit procedures to support a risk-based assessment approach. In this context, we have included procedures with 4 different focuses. Number 1 is overall assessment of a system of internal control and enterprise risk management. I haven't written down, but please understand the assessment is for internal control systems, enterprise risk management, and strategic management. And then component evaluation, number 2, component evaluation. And number 3 is principal evaluation and the audit findings regarding to internal control deficiency. So we have 4 objectives in the assessment. Please remember this one also. Let me introduce you our audit procedures related to IC and ERM. There are 7 procedures regarding control environment, 8 ones regarding risk assessment, 5 procedures are related to control activities, 6 of them are related to information and communication component, and then 9 procedures regarding the monitoring activities. These are the components of internal control system. 25 procedures are related to ERM. As you can see, many procedures are related with both IC and ERM. And I must say that our main source is the Enterprise Risk Management Framework of COSO, old version 2004. We haven't updated yet because we would like to monitor the progress of auditees. Okay. So I'm gonna slow down. I have a warning. Okay. 25 procedures are related to enterprise risk management. Many procedures are related with both internal control and enterprise risk management, old version. We did it because we wanted to monitor the progress of the auditees in terms of these systems. So we want to apply the same methodology for at least 3 years. As you can guess, if we change the methodology, the results will change and we cannot follow up the auditor situation. So this is the 3rd year and 2001 audit. And after this year, it's the decision of the management, but we will probably update the procedures. And the 10 procedures are related to the strategic management. So what has the TCA done so far? We have assessed the financial management. We have I will call the systems from now on. I mean the 3 systems. We have assessed the 3 systems in 2019 and in 2020. In 2019, we assessed 384 auditees through the 35 audit procedures. And we aim at assessing if ERM and internal control systems exist and operate efficiently, how well strategic management is established and operated. We assess the efficiency of ERM, the systems, quantitatively and qualitatively. We monitor the progress, improvement of audited entities regarding the 3 systems. The TCA published reports including audit findings regarding 3 system deficiencies in the regularity audit report, and we put qualitative results of the assessment in the activity report every year, and TCA issues 3 systems analysis booklet. Now, I think it's also publicly available, but of course it is in Turkish. But you can find our results of the evaluation, both quantitatively and qualitatively. And also TCA issues the general evaluation report to the parliament. And in this report, we also evaluate the general situation, general evaluation of the whole government, you know, the central budget and the municipalities and other institutions. we send this report to the parliament every year. I would like to show you the assessment for itself. It's in Excel form, but I must warn you, we have integrated to our audit management system. So we have some controls in the audit management system, which is called SAI. I'm gonna show you this form, evaluation form, original form, and I will explain how we are assessing. Let me share the form. I don't know if you can see right now.
We can see it.
Yes, very good. And this is the Excel form. And let's start with the first column, a relevant component. Relevant component means the component of internal controls. CA means control activities. CE means control environment. IC for information and communication. MO for monitoring, and the RA for risk assessment. So I would like to remind you that we have 4 focuses in this on this assessment. One is the overall assessment, and the component evaluation. That's why we have the relevant components, because we are doing the component evaluation. And the questions number, relevant field. This means some questions are related to strategic management, blue ones, blue. And some questions are related to enterprise risk management, and some of them are related to internal control systems. So since we are evaluating 3 systems, we have this column. And the audit procedure itself, and the relevant main legislation. It's a quick reminder for our auditors. And you can see under the box that the principle 3 and principle 5, these are principles of the internal control framework of COSO, because there were 4 focuses, remember, overall assessment, and the component assessment, and the principal assessment. That's why we have this. Let's look at our scores. As you can see, there are some numbers from 0 to 4. We have these numbers because we also quantitative results. For example, so I would like to link these scores with the requirements of the effective internal control systems. Let's remember the requirements of the effective internal control systems. 1, the components and relevant principles should exist, should be present, and all components, and secondly, all components and the relevant principles should be functioning, and they all should operate together. If our score is 0, it means there is no work on this issue. It means the number 1 requirement, the existence, is not here. So we can say that the internal control system is not established. If number 1, the score 1 means there are works on this issue, but they have not been completed. It is still, there is no existence here. So the component and relevant principles are not present. And the number 2, but there are some works. So that's why the score is 1. And the score 2, relevant works have been completed, but not put into practice. So let's remember the requirements for an effective internal control systems. Okay, the components and principles exist, so they are present, but there is no, they are not functioning, no implementation. That's why the score is 2. And the score is 3, relevant works have been completed and put into practice, but there are inefficiencies in practice. So that's why we score it as 3. And if if these indeficiencies can be subjected of the compliance audit, the audit teams write down some audit findings and they place in the audit report. But I must warn you, not all indeficiencies are related to compliance, in compliance. And then score 4, yes, there is an effective practice in this respect. It means yes, there are 3 systems, and they effective, and they are functioning effectively and efficiently. I would like to show you a few questions. Let's start with the control environment. These are examples. Are duties, mandates, and responsibilities clearly specified and put down in writing within organization structure of the entity? So there are scores from the 0 and 4. And let's look at the other question related to control environment. For example, human resources. Is the human resources policy concerning the recruitment, rotation? Sorry, no, I cannot read it. Promotion, competence, performance assessment, and disciplinary matters determined and announced to the personnel of the entity. So, as you might see, this is not related to the financial objective and the reporting objective. And it can be subject to the compliance objective, but mostly it is related to operational objectives. So that's why I'm saying that internal control system is bigger than the reporting objectives, the reporting function. But financial audit standards naturally focus on the financial reporting sides of the internal control, because relevancy is important. So if some controls and risks are not related to financial reporting, so within the context of the financial audit, one auditor doesn't need to understand the part of the non-reporting functions of the internal control system. Let's look at another component. I think there is a... Sorry, is there any question?
هل هناك
Okay.
It seems that the microphone is on somehow, somewhere.
Okay. Okay. I'm gonna deal with I'm moderator and presenter at the same time. Okay. I think it's okay, right?
Yep, exactly.
Let's look at the risk assessment questions. Is the content of the strategic plan compliant with the legislation? This is an interesting question because it's, you know, the concern of the compliance audit, concern of the financial audit, and the concern of the enterprise risk management, internal control system, and strategic management. So if there is no strategic plan and not complying with the legislation, I think it is obvious that there will be some audit findings. And let's look at the other one. Is the organization's budget associated with its performance objectives and activities? Yeah, I think my colleague Farhat gave the information about this one. Let's look the other one. Has the administration identified its institutional risks? It means that the risks at the level of the mission, vision, strategic goals, and entity level objectives. We are actually all auditors at the TCA know what that means, and I think the question can be changed, because someone who reads this one might not understand exactly, but our auditors know what that means, because we have been implemented this for more than 15 years in Turkey. Have the risks been determined with the participation of the staff? It is really important, because the risk should be identified in a participatory approach. For example, at the TCA, we organized 19 workshops with the participation of almost 400 colleagues from every level, from the top management and other staff. So we have a risk inventory which is broad, and our risks are identified really in a participatory approach. Let's look at the other control activities, I think. Yes. Our work flow processes determined. Have control activities been determined to reduce the risks identified by the administration to an acceptable level? It is the essence of the system, actually, this question. If it is no, there's a big problem. So the main aim is to have some control activities. And I think information and communication. Is there a management information system that will produce the necessary information and reports required by the management and provide analysis? It's an interesting one, and so we have analyzed the question, and I can say that the majority of the institutions have the information system. So because this is the era of IT, I think that's why. Let's look. Is there a data recording and filing system in the institution? And the many organizations have this as well. And the last one, monitoring. Has the action plan for compliance with public internal control standards been prepared? What does it mean? In Turkey, Ministry of Finance issued some control standards that organization should adapt to. So there are some action plans for adaptation, and every organization should have this action plan. It's also related to compliance audit by this mean, I think. Is the internal control monitoring and steering board charged with the approval of the top manager? We have a board who has oversight role of the, not oversight role, but the monitoring role, because it's not independent from the institutions. It is, this committee is within the organization, so it's not, they don't have any oversight role, just monitoring role. I think it's all that I can say about our assessment approach. So if you have questions, I would be happy to answer them. Thank you very much.